All right, ladies and gentlemen, hello. This is me, that is Chauskas from Markets.com, and today is the 8th of April, 2025. So yes, welcome everyone. Look, I just wanted to do a quick little video here on the indices, on the U.S. indices, because yesterday we saw a bit of action back to the upside, right? I mean, and maybe this is where some people are hoping to see a nice little recovery back up here, and maybe we could go higher and all that stuff, right? Look, let's dig in. First of all, the problem has not been removed because there are still tariffs. We only have reports where countries are now approaching the U.S. administration, and kind of they're trying to make a deal of some sort, in order to kind of maybe get an exclusion. And this is what I talked about in my previous videos, where I talked about that there could be some exclusions before, when the tariffs last week, when the tariffs came out. I said now the whole focus will be on which countries will get the exclusions and stuff. So, and this is where we will have to look into those stocks and which could benefit from those exclusions. But at the moment, we don't have like any official rhetoric or anything like that. So that's why, yes, looking at this technical picture here on the NASDAQ 100, yes, we had a beautiful move to the downside. I talked about this 50% retracement here in one of my webinars, and beautiful test, beautiful tick. Look at this on the cash index, beautiful rebound from that 16,300 and kind of 27 territory, and we pushed back up, and now we're struggling, for now at least, we're struggling to jump or should I say stay above the 38.2 here, this retracement area, which is roughly around the 17,720 zone. Now, by the way, this Fibonacci is drawn from the lowest point of October of 2022 to the current all-time high. So as you can see, we did a retracement of 50%. I mean, wow. That took us like, like 3 years to, well, 2 years actually, 2 full years to accomplish this whole move. And as always, the sell-offs happen very, very quickly, and we can wipe out every like half of it, what took us 2 years to gain. We can wipe it all out in just like 2 months or stuff, like, right? So look, for now, what I'm looking at here, I'm kind of still in that field where I'm not saying that everybody should get very, very bearish here, because look, yes, we have declined a lot. Yes, we have declined somewhat of a 20%. Let me just grab this one. So from the peak, from the all-time high, from the peak of this year, we have dropped more than 25% on at one point. Now we're around just kind of 20%, just right. 20% decline in a very short period of time. Yes, it does look scary, because again, now people are wondering which kind of a recession were we getting. Are we going to get something like that we had in 2020, where like it was a flash crash in a way, before COVID, or actually are we going to get the 2008 2009 scenario, where it's going to be a little bit of a prolonged one? So I would say, I think what could happen, in my opinion, that we could see a somewhat of a prolonged decline, but not as severe as, for example, as the 2008 2009, something that not going to be like that shocking. So yes, it's going to be an economic downturn, but not as severe, so it's like if you want to call, you can call it like a modest decline, like a modest recession. So yes, this is this is something that I'm kind of considering right now. I mean, again, this is a lot of things can change if factors change. If suddenly, let's say, the current administration, the U.S. current administration, will say that, you know what, we'll just kind of pause the tariffs, and for now, because we taught a lesson and everything like that, and taught the world a lesson, and then basically maybe this is where the stock market could rebound and push back up. But if they stick to that, if they stick to those tariffs, then yes, of course, it becomes a little bit difficult for everybody. But as we know, one man's loss is another man's opportunity, right? So I think that for now we're seeing a little bit of a retracement, and I think that we could still see maybe a little bit more retracement. If we look at Nasdaq here, of course, the technology right now is not the place to be, because we can just look at Nvidia, which has been on a destruction mode here. In a destruction mode here, we dropped below the 100 level, and at one point dropped almost to the 87 zone. So look, there are a lot of problems at the moment, and of course the stock market is one of those, or actually the main one. But at the moment, I would say yes, we're getting a nice little retracement back up, but currently we're holding below the 38.2. If we somehow push above the 38.2 here on this Fibonacci retracement on the Nasdaq, and by the way, there's a similar thing happening right now on the S&P. And with the Dow, actually, let me double check, because again, I'm not quite sure. Let me just double check if this one is actually, because Dow is a little bit of a different animal, I would say. Although, yes, similar, but still different. Look at this. So we did yesterday the 50%, but we actually bounced. Ah, okay. No, everything's in line, actually. All both the three top indices are in line. So we're all testing now the 38.2. So it's fine. It's okay. So what can I say here? Of course, as long as we stay below that 38.2, then there is still a chance for a further decline. However, if we somehow push back above the 38.2, this is where the market could get a little bit, excited and thinking, oh, great, maybe we're done. Maybe it's now the time to buy those low stocks. I would say don't rush, because let's say if we again approach this from the technical perspective, looking at Nasdaq here, we're currently doing a 38.2 on the Fibonacci retracement, which is drawn from the high of the 26th of March to the yesterday's low. Basically, we're just below the 38.2, so we could go back to 50% like retracement. So we could go a little bit higher here, but still, the problem remains that now we're in a mode of lower lows and lower highs. So if this continues, if we, for example, then struggle somehow to overcome, let's say in this case, the 18,300 zone, which is, by the way, that 50% on the Fibonacci retracement, which I had drawn from here, from the high of the 26th of March to the current lowest point of April, then yes, that's roughly around here. On the S&P 500, so it's probably going to be a similar story. If we take it from the 26th of March to the current lowest point of April, you'll see that the 50% is somewhere around the 5,290. And look, I think that this is right now going to be a very important key area to consider, this 5,000 kind of 130s, 173. So if we do clear that, I'll go a little bit higher, but only I'll class that move only as a little temporary correction for another possible leg of selling, because I really don't think that the problem has disappeared. And another thing, I don't believe that we're done with the weakening the companies, right? Because look, in my opinion, the cash-rich companies will survive, of course, and when the stock market drops a little bit more, this is going to be a perfect opportunity to go in and buy out some good companies, but maybe they're not very cash-rich companies. However, they're good companies. They have maybe good products and some good services, and this is, like I said, this is where where you normally go for a shopping spree, and this is what you normally do. So and like I said, that's why I'm not excluding this scenario. So I think that there could be some more downside to come. Not that I'm very pessimistic, no, but I am, like I said, I'm just kind of trying to be maybe a little bit of a realist. But okay, look, let's see what's going to happen at the moment. Like I said, yes, great, we're having a nice little retracement. If we start pushing above the 38.2 here, not on this, not on the smaller Fibonacci here, on this like this bigger one, which is drawn from the lowest point of 2022 to the is it actually the lowest point of 2022? Yeah, the lowest point of 2022 to the highest point of 2025. We're climbing higher, but again, like I said, I am gonna consider something around this area, something around these levels, and then and basically this downside line somewhere below the downside line. If we remain below it, then the downside scenario is still on the table, and I really don't kind of, how to say, I'm not excluding to see 4,500 or maybe even the psychological 4,000 zone. Let's see. Ladies and gentlemen, I hope this helps. Again, like I said, be careful as always. I keep on saying to everybody, stay safe, have your stop losses in place, risk only what you can afford to lose, don't overtrade, and everything will be fine. I'll see you later in my next video update. Bye for now.